Hello, this is Vance, and this is Friday, October the 16th, 2015. These are the CL trades for today using the slow hand method for price action. I wasn't going to do videos on Fridays any longer, but I decided to do this one today. It's almost 2 o'clock Eastern Standard Time. Finished for the day. And the reason I wanted to do one today is because I had some problems with rendering a couple of videos over the last couple of weeks, and it's been kind of sporadic. Been having problems. Even had a problem last night trying to load up a video. Took a couple of times, and I still haven't figured it out what the real problem is. And I'm not. I'll try to figure it out on the weekend. But if I take my computer into the tech, it's going to be there for 2 or 3 days, and I really don't want to do that. I can still trade. It's just that when I do the videos, it causes a little bit of problems. So I was okay for the last couple of days, and I can use my laptop as well as a backup. But the problem is I can't record. Like the Camtasia isn't loaded on my laptop, and I don't want to do that. My microphone and everything else is loaded on my main trading computer. It's got the big screen. It makes it easier to use as opposed to the laptop, which is kind of a hassle. I just use that for emergency backup sort of thing. So, but the reason I want to come on here, it was a real tough day for me. Tough day from the standpoint of not a couple of things that didn't really turn out that well. Not that I lost today, but the problem is that a couple of things that looked like they should have worked out well and they didn't. And so I want to really talk about that. I don't really often talk about it, especially with a couple of the other challenges, things that I know that I do, but I don't really explain in great detail because really the slow hand method is about trying to be as simple as possible. But it's not easy. It's simple, but it's not easy because there are some other aspects that kind of play into it. I don't talk about volume too much because the 800 tick chart really it has a volume element to it, but it's not really a volume chart because each trade, the 800 ticks is really a transaction, and it could be 10 contracts, it could be 2 contracts, it could be 1 contract, whatever it may be. And I don't think it's really that important from the slow hand method perspective, so that's not a real problem. It does have a volume element, but because it doesn't have a specific volume countdown or element as far as individual contracts are concerned, the time can be an issue. And I'll talk a little bit about that. Hopefully it isn't too confusing. I'll try to make it as simple as possible and how that relates to whether or not you take a trade in certain areas. And what I mean by that is that there may be areas where trade looks like a really good second entry long or second entry short, and depending on how the context of the market traded into that area, as far as price action was concerned, whether or not to take the trade, that's the first aspect of it. But as far as time is concerned, how long one is stuck in maybe a range. And there's a couple of elements that did that. It makes it a little bit more difficult as far as trading is concerned. So let me talk a little bit about that. Maybe it'll make more sense as I go along. Now, the first trade I saw was down here at roughly about just after 8 o'clock. 8:15. We had a channel from the overnight. Now I'm trading the December contract now. I should actually make because it just overtook the November contract as far as volume is concerned. So I switched over to the December contract. So I did that today. So bear with me. This is going to be the December contract here. The first trade I saw was this one down at this bottom. Now it's a green. I marked it in green. It's really a second entry long, but you see how these bars are really tight like this. Price came down here. It pulls back and then it attempts to go down again. And this is a really strong bar. It looks like a trap to me. I'll just make it a little bit bigger, but it looks like a trap. And if you look at it from the perspective of, this is from the overnight, you have these dojis. Is there some indecision? Price moves down and then moves up. I think it was a reasonably good place to get in. Your 15 tick stop box is below here, as long as you held on to it. Now, there is a hesitation. It pulls back a bit, moves on. By the time it clears out, I'm thinking it's going to retest this area right here. But if price pulls back a couple of times, you might have gotten shaken out on this one. It might have made you nervous and kind of tightened up your stop a little bit. But then here we had a breakout pullback. So price moves up, pulls back, and then this is definitely, to me, it looks like a real trap of traders think it's going to go lower from here. And so this was a place to go long, only because I think from the price is going to retest this area right here. Now, why not a second entry short? Well, it could have been a second entry short too. Price comes down here. This is your first entry short, pulls back, second entry short, and you may be thinking a measured move. You had this first leg down, and then maybe this is going to be the second leg down from here. That could be the case. I wasn't thinking of that. The only reason I that could have been a possibility as far as that, but I mean, you look at these bars right here, and it hasn't really broken the channel, so that's why I didn't look at that as a second entry short. But it's a pretty small channel. It's only couple of bars here, so you really want to see it break out down and then maybe break outside this channel before you actually go short on it. In that direction. So you want to see. So that wasn't really enough for two pullbacks for me. That's what I'm saying. I mean, if it came back down here and then it came up here and then had another setup bar, I would look at maybe second entry short. So it really is only the first entry sort of thing as far as the short was concerned. Within this channel, price gets to this area. Now this is kind of a little tricky, and the reason this is tricky is that now you have a break of this trend channel. Price pulls back again, and honestly, I was thinking maybe this is the top of the channel. Now there's a couple things that are problematic with this particular trade. First of all, it's at the daily high, and the overnight high is right here. So that's the first thing. You're really close to the high. Second idea is that it's kind of a small bar, but at the same time, it was a pretty strong move up. And I'm thinking that if you have a break at the top of the channel, you can go pretty long. It can turn out. Now, Al Brooks likes these kinds of trades because he calls them his favorite trades. And the reason he thinks is his favorite trade is that the risk reward ratio is pretty good in his favor. In other words, if the price comes up, it pulls back, and if it breaks out to this channel, if it's tested here, and this is the first test here, we've tested right here, it's come back. If it breaks through here, it probably will go quite a ways. And so that's why I was thinking this better from a second entry long. That's why I marked this trade. It worked out. It's kind of a small bar. It could have even marked it in green, but it did get your 15 ticks off. But there was no runners didn't survive. Now, reversal. When price did get to this area, now you're looking at this is the top of a channel, especially on this one. So if you look at it, here's the break of the channel, first break, and then it breaks to a new low, second entry long here. But when price gets to this top, you have the first break, pulls back, second entry short here. Now, the problem with this second entry short is enough room to get out because it might test these bottoms right here. Okay, this double bottom right here. But it's a poor bar. It's a kind of a bull doji right here. Whereas this is a strong bear bar right here when it completes and it closes on its low. Thing is that there's not quite enough room. It's really tight as far as where that bottom is concerned. So you'd probably want to limit in. And anytime you limit in on a trade like this, your stop would have to be below the nearest high or the nearest low. And you'd have to limit in. So it has to pull back quite a ways for you to limit in. That's why I marked this one in green. It's possible he could have done it, but I didn't do it. I mean, it was I was still looking at this point in time as from this trade right here. Price pulls back again. Now here's this looks to me like a trap. The only trouble with this particular trap, again, it doesn't test high enough. If you're going to go short or long at those areas, you'd really want to see the A position is for price to come back down and to the retest is lower than the initial. So what you would want to see is that price would go up tick higher than this one and then fail. That's why I've marked this one in green, because you'd have to limit this one in as long as your stop is above that. That's on the CL. Again, if you were depending where you get in, you want to get in low enough, or you want to sell so that your target is within this small range, perhaps, before this bottom right here. It did work out. Price comes down here. Now this is another area where I had a little bit of a challenge for. This is the previous low. You can see that there's this price turnaround right here. And so this is kind of a marker. And so if you extend this line here, I think there's going to be, there'll probably be buyers down here. And so I'm thinking that might be the case. So that I look at for a bounce off this area. What happened was that when price broke this channel right here, there's a first break. So it breaks the channel. Now, to go short here, I marked this one in green. You have to say that it's kind of it's a risky trade, but because of this strong move down here, and because there's room enough to get to this double bottom from this side of the chart, I'm thinking that you could have taken that trade. It looks like rejection. Prices attempt to go higher, fails, higher again, fails. So I mark that one in green. It would have worked out, but see this overlap? You might have gotten shaken out in that trade because of that. Price pulls back. You might be able to close it out with just a smaller or tighten up your stop or something. That's why it's really only a green trade. Now, you don't know until afterwards. Had you held on to it, it would have worked. Now, here's a trade that I got caught on, and that's why I marked it in fuchsia. Price comes down to this area. I looked at it as first failure, and this is a second entry long off of here. So first entry, second entry long. It's a lower test than this previous one. There's support off to the left here, and as a result, I went long here. The problem is that the only thing that was disadvantage is that it was not enough room to get the targets. Now, my stop was below here, but there wasn't enough room to get to this double top, and so when you look at it, it didn't fill. It didn't get there. So my first two contracts, so when price turned around here and I had this strong bar here, I closed this trade out. And I took a loss on this one, only because I thought this was really going to bounce now and retest this area. So I took a loss on that. Now, once price failed here, if you were looking for a short, this wouldn't be a bad place to go short, because now you look at it from the standpoint that this is a failed second entry long that turned into a second entry short. That's what that is. And so, but I wasn't quick enough on the draw to be able to get that trade in here. There's just enough room to get out. But what I was looking for is that I was closing out this trade. I don't reverse. I mean, I've tried it in the past, maybe a couple of times, is hit the reversal bar. That would have been or the reversal button. That would have been the thing to do, but I didn't do that. So I took a loss on that particular trade, only because it's a decent setup. It's a pretty decent setup. If there's any disadvantage about it, it's kind of like it's stacked up a little bit, but I thought that this was really aligned, and it didn't work. It just is a trade that just didn't work. Had it turned out, it might have been, we're ways away from the EMA. Here's the double tops here. The only the downside is that we had this run down, but you can see I thought this was capitulation and that it was looking for found support and that it was going to push back up here, at least get my first contract off. And it did make a valiant attempt, but only got ahead maybe 10 ticks before it turned back down in the other direction. So when it turned down, let's take a look at the measured move from here. Let's call it from here. Right down to here, you have this move down to this area. So you're looking probably for another measured move, first pullback, second pullback. And if you look at it from the measured move aspect of it, it's going to be somewhere in this neighborhood. And look at this. It really, off of this one right here, a perfect measured move. So when price got down here, I thought this was a really good trade from the perspective is that we break this channel, it tests to a new low, and it is a little bit of dojis, but this was a good trade. As you can see, it moves up this channel. We have this first break. Now, I marked this one in pink as well, because the reason I marked this one is that you almost think that this is a first on the same bar, first pullback, second pullback, and that you can go long from here. Now, it is a riskier trade. Think that you're going to have another move up, like another leg up. Unfortunately, it only gave you a few ticks before it turned back down again. Now, it found support down right here. And this is so after these bars close, this is truly another second entry long. New high, first entry, pulls back, second entry long on this little doji. Maybe not quite to get in here, but then it gives you another opportunity to get in right here. So this is really like a third entry. And because your stop is below these areas right here where these previous matching lows were, it was a good trade. And it turned out to be a really good trade because your runners were alive, gets your first two contracts off, and then it pulls back again. So, I mean, this one right here, I didn't really like this because it was stacking up. And it was, even though it's kind of like a breakout pullback, it's at the top of these channels, it would moved up, it would have gotten your ticks off. But we look at from the perspective of, now we have this first pullback, fails, second pullback. I marked it in green because it kind of stacked up a bit. But now we're looking at maybe another move up. And it did turn out to be that way. So price moves up to here, pulls back again. Now here's again two pullbacks, first pullback, second pullback, and going long here. Now this is literally the end of the day. That was really the last trade. I took a couple snapshots of these trades, but particularly this one. I was finished here. Now what I want to talk about is timing, and that's the last thing I do before I sign off here. Hopefully this will render properly. This area right here This from here, from this bar right here, this was a 12.13, and by the time these finished up, here's 12.48. These 5 bars took 30 minutes. Okay, 30 minutes, and despite the fact that it's set up, that 30-minute time frame, I mean, that's enough time for markets to turn around. That's 30 minutes. Here, that's why this is kind of a questionable way to trade. So if you get in on a trade on here, you have to sit through. Let's say you get on this bar right here. It's at 12:33, and by the time it finishes up, now this moved a little bit. This is 12:40, 48. So we're talking 15 minutes before it starts breaking through here. And when it broke higher. Now, this is another thing that I want to show you. If you look at the target, I'm using this box here. This box is really called I don't know what to call it, the red zone, I guess I'm going to call it, something like that. What I was looking at as far as this is concerned, is this red zone, is that if you consider this as a range from here, if you look at the side of the other side of the chart, left side of the chart, let's say that this was an area of hesitation here previously. You can see price bounced off that area again. So let's call this a range, this red zone. My feeling is that if price gets down through this and it can break through here, it will go that much higher. So I was looking at this from a target. So I look for an area like this as a target to getting in lower. Now, this would be an area where you would maybe add on contracts, or if you're trading to put in near the bottom of here, if price can break through here, then you'd be more confident that price is going to go somewhat higher. And if it comes back, maybe add on an area like this one. Anyway, there's a couple of things there. I just wanted to kind of touch base with you today because of the fact that I missed a couple of videos over the last week or so. You're always going to lose some on trading. I mean, some of these setups were pretty good. I mean, this one in particular, I thought this was going to be a great setup. I mean, you look at it, it's a very nice bull bar here. Breaks a little higher. You got support to the left side, and it just didn't work. I mean, it just failed. That's a pretty decent setup using the slow hand method of price action. But this one worked. Breaks through, pulls back. Now this is not as nice a setup. I mean, this is a nicer bar over here to go long on, but you can see this wasn't as nice a setup, and yet this one worked out. And then we have this 2 pullbacks here to this area, it moves up pretty well as here. This one down here, your runners are safe. Like price, depending where you get in. If your entry price is below 46.77, if you're able to limit in on that. But it came back and almost touched, right? See this bar here, right? It came back and touched it out, would touch out your runners. But in getting on this trade here, your runners are definitely safe. And you're all the way through here, all the way up. You could run this to the end of the day. So it was really like a big range day. We price traded way down to this area, and then really traded right back up. So where it opened, once it found purchase down at the bottom here, it just moved its way up. Anyway, that's it for now. This is Vance. If you have any questions, please let me know. Bye for now.